So you have Deutsche Bank this week coming out saying there's now a 60% chance that there's a recession in 2017 in the US. The New York Fed said there's only 8% chance. So, Ann, who's more credible, Deutsche Bank or the New York Fed?
I gotta go with the New York Fed. Deutsche Bank, the last two recessions, using this metric, Deutsche Bank had a 70% chance. So I don't think we're in, even if you're looking at Deutsche Bank, I don't think we're in the red quite yet.
So I would go with Deutsche Bank. I think, listen, I think the Fed, I know we're not into flop and fly yet, but I think the Fed's talking its book, right? The Fed doesn't want a recession.
Right.
Or if the Fed comes out and says there's a 60% chance of recession, all heck's going to break loose, right? So the Fed is talking its book. It wants people not wants, but I mean, generally, listen, it's not cutting interest rates. If the Fed really saw a 60% chance of recession or higher, hopefully they'd be cutting interest rates. So clearly the Fed thinks that the recession is unlikely.
Right, and let's be honest, like the Fed, not just New York Fed, has a terrible track record of predicting this economy. I don't know about Deutsche Bank specifically, but I think the question is, this has been a slow, sluggish recovery. A lot of people think we never got out of recession after 2008. Is there anything new here? Is there anything that Deutsche Bank is seeing? Is it the Brexit vote that's changing them to say, wait a minute, something's changed here, that maybe the odds of recession are rising in America?
Right, what their model looks at is where people are placing their bets. And what they're saying is that more and more people are placing their bets on long-term bonds. And that's the kind of thing you buy when you're really scared, right? And so that's what they're seeing. And Brexit and, the market took a big dive at the beginning of the year, but then recovered, and things seemed like they're okay when you look at the stock market. But what they're saying is when you look at the bond market, which has been a good indicator, people are still running for safety, people are scared.
Right, and so meanwhile, tomorrow we get the jobs number, which is the next big known event, known for financial markets, and we could be having a very different conversation. If it's a hot jobs number, no one's going to be talking about recession. Any forecasts from you, Ann, about what we're going to see tomorrow?
I think it's going to be a lot better. You had the Verizon strike impacting the really terrible numbers last month. So I think it's going to be much better than we've seen before. They did revise the past numbers down a little bit, so it's high stakes.
Every jobs number, it's the mother of all economic reports.
It's the most important jobs number of the year.
So
once
again, I'm going to disagree. I think you're wrong. I think that it is a tendency of economists. So last month we had a very big disappointment. It's a tendency of economists to predict reversion to the mean.
Right.
They're expecting that we're going to come back to 200,000. I think that is. It's just what they do. They expect, we had a bad month, we're going to have a good month. And I don't think they're actually looking at it. So I think
you're taking the under. You're taking the under.
I'm taking the way under. We have two, the ADP report was good.
ADP report came in above expectations.
Was good, but
not the worst predictor.
Right, it's not the best predictor. And the other thing we have is that we had a mild summer, and that pulled jobs forward. And I think that's going to continue to reflect in lower jobs throughout this summer.
All right, I love the debate. Save it for Flop or Fly, which we'll get to in a second. But we're also here with Rafael Garcia, our social video guru, who's taking questions from Facebook. Rafael, any questions about anything we've discussed so far?
Yes, I want to tell everybody on Facebook to comment on the comment section below, share your thoughts, your question. I'll be taking the question and telling to you guys. We are seeing that people are starting to like the video. Like, for example, Herman Lee and Julie Carey was one of the first people to like us on Facebook. And we have a question from Lucinda Shen, and she asks, are there any economic indicators that suggest that the U.S. economy will be just over the next 12 months, or any reason to feel even bullish about where the economy is going, considering all the Brexit presidential election uncertainty?
That is a good question, right? So there's so much talk about the negativity. What could go wrong? What could go right? What gives you, Mr. Frowny Face, what gives you optimism about the U.S. economy here?
Well, I mean, I think that Brexit makes it harder for the Fed to raise interest rates.
Right.
And I think that was a concern for a while, that we'd have a rising interest rate environment where the economy is kind of weak. So I think the Fed's on hold. That's generally pretty good. It's slow lending growth, but certainly companies and individuals are still borrowing. I think we had like a record refinance rate recently or something. And so I think the lending markets seem good, and that's usually good for the economy.
All right, and you edit the macro section in the magazine. So what makes you optimistic about the U.S. economy?
I think there are a lot of reasons you see. I don't know, maybe corporate profits are down, but stocks are pretty strong. The economy has been growing for years.
We're going on 7+ years.
The PE of the stock market is a pretty good indicator, right? It's relatively high. Usually you don't see recessions when people are paying this much for stocks.
Yes, but again, the bond market rates are very low, so the relative valuations is
and the market is not efficient, right?
Yes, the market is not efficient, Elon Musk. Raphael, we have any other questions?
Yeah,
on
there you
Facebook?
go.
We have more questions about the recession. For example, Rodolfo Sosa Garcia says, when exactly did we get out of a recession?
That is a great question because I was talking with our producer before we came in here that there have been polls consistently that a lot of Americans, at some points, a majority of Americans feel like we never got out of recession in the first place. So officially, when did we get out of recession?
December 2009.
December 2009, right? So we're approaching 7 years of official recovery, and yet a lot of people don't feel it, which is why I think something like a Deutsche Bank saying 60% recession, it resonates with people because they feel like this economy has never really been on strong ground since the crisis.
I think we've had a wage growth recession, right? That's continued throughout the way. It's been the wageless recovery. And so I think the average person doesn't see in their bank account or their paycheck, and so you feel like you're still in recession.
Right. And so again, this brings us to tomorrow's jobs number. We're all going to look at the headline number, payroll growth, and what the unemployment rate is, but wages up or down, that could be the real indicator for the Fed for sure.